5, 4. Hey, everybody. Welcome to Ways to Generate Passive Income in 2022. I'm Chris Miles here, Anti-Financial Advisor. Got Craig, or what do I call you? Like the coach galore. I don't know.
The Money Ripples go-to guy, man.
That's right.
You've trained me well, I must say.
You are the man. That's what we'll just call you, the man.
Feelings mutual.
Yep. So definitely excited to have you guys join in. I know sometimes with social media and everything, when you're on live, it's kind of coming in. If you're watching the recording, great. Those of you, if you're on live, chime in. Go ahead and comment and just say you're here. Love to see it. I may or may not be able to see it depending on when this happens, but love to be able to say hi to you guys. Love to hear where you're calling from. You're not calling. You're just sitting on your phone or your computer right now looking at this. And if you're watching the recording, welcome as well, since you're in the future, our future. So, all right. So today, like we said, we're going to talk about ways to generate passive income in 2022. I'm not going to mince a whole lot of words because the truth is I want you to get the biggest bang for your buck out of the time we have here. So I actually prepared. Now, when I say I prepared a PowerPoint, don't tune out. Don't think this is like the typical PowerPoint where it's got lots and lots of words. Really, we're just trying to show you and help tantalize the different parts of your brain so you actually retain this for your memory. Nathan, welcome from watching from work. Me too, which is in my home office, but still you gotta tell the kids to stay quiet. All right, so Craig, what would you like to say? Just introduce yourself here a little bit more.
Yeah, so I was actually one of your clients, Chris, back in, it's a long time ago now, maybe 2015, 2016, somewhere around there. And I historically, I used to work on Wall Street, so very knowledgeable when it comes to, all things stocks, bonds, mutual funds, et cetera, kind of like your classic financial training. And I remember I reached out to you. I found you through your podcast back when it was more in its infancy stages. And, I was, getting burned out from my job and, wanted ways to create passive income myself because I was thinking, if I wanted to take a break, what am I going to do? I'm not going to sell out my 401k. I don't want to sell out my brokerage account and, have to deal with the tax consequences. So we connected and gosh, I kind of jumped in with both feet, first in the physical real estate space. I think that's a really great place to start especially for kind of beginners looking to create cash flow, and then really became, an expert on the fund and syndication side. And I've just really kind of loved learning about this whole alternative cash flow investment space, which is, seemingly growing year over year. I'd say it's, 5 or 6 years ago was very nichey. And now I'd say, really becoming more popular, especially as a lot of these real estate podcasts, become more popular and more people start to tune in. I think it's, going to start to rival the kind of the mainstream media 401k type of investing here over the next couple of years, especially as more and more people try to retire, right? It's tough if you're just going to rely on that 401k nest egg. Especially now, if you just retired and your assets are down 30, 40, 50% in some cases, can be a lot more difficult to make those withdrawals on a smaller asset base. So, you and I, we're clearly bought into this way of thinking, and now we're trying to spread the message.
Yeah, we are, man. Yeah, you're kind of like Finn from Star Wars, aren't you? You're like the Wall Street stormtrooper who left the dark side to come over here. And then you were the student that then became the teacher. And now you're teaching our one-on-one clients and coaching them and just getting massive results. In fact, by the way, congratulations with one of our clients. Won't mention their name. We always keep our clients anonymous unless they share it themselves. But man, like he has a $15,000 a month goal and you got him to halfway there. That's great.
Yeah, I've had some big results with a guy who was historically invested in physical real estate, wanted to start diversifying his portfolio. So we kind of mapped out a plan. I did a lot of education around, funds, syndications, how to think through the risks, how to think through the returns, what's the right due diligence approaches. We got him connected to a lot of different advisors that are, within our network. And he's made some capital moves. and is really kind of, on the way to his goals. So he's super pumped, and we're very happy to have him on board and see him, get closer and closer to his goals.
Yeah. Well, I know a lot of people are going to wonder, like, how in the heck did he do it? So we're going to talk about that. We're going to share actual real case studies of those kind of things. And as a reminder, if questions come up, guys, type them in the comments. Say hi. I know there are a lot of you, more of you just jumped on in the last few minutes. So by all means, ask questions, because we are going to address those today. Definitely don't want to take up all the time just yapping at you. That's the big thing. But as Craig said, I mean, there's a massive thing happening right now, and the media is trying to ignore it. They're ignoring the fact that everybody is lost. If you have any money in the stock market right now, in general, you've probably lost at least 20% to this point. Now, if you've got it mixed where you don't have as much in stocks, great. You probably don't feel it as much, but there's people losing at least 20% year to date. And we've had some people that had literally $1 million plus. I mean, imagine if you have $1 million, you lose 20%, that's 200 grand you've lost, not to come back. It might come back later, but how long do you have to be in it for the long haul to wait for that money to come back? Versus our clients, where we say, hey guys, even though we don't ever give investment advice, by the way, disclaimer on this interview, what do we call this? Webinar. I don't know. I do too many podcasts to remember what I call this. This webinar, just as a disclaimer, we don't give investment advice at all, both in our one-on-one coaching, and we're not going to give you investment advice here. We are going to give you a lot of education about where our clients have been investing, and actually some of my own personal preferences, as well as Craig's, of where we are actually seeing the best opportunity for investments right now. Not just 2022, but even going into 2023 as well. Before
absolutely.
Lawana, by the way, hey, thanks for saying hi. Before I forget, also want to give a shout out, because she's kind of hidden right now, but Danielle Hollenbach, she's actually right there in the back, but she's in the back. Hollenbach's in the back, right? Our chief marketing officer, she's running the show here and helping type in and field your questions as well. So again, Daniel, make sure we don't forget you. We love you, Danielle.
She keeps us above water, that's for sure.
That's for sure. Yep. All right. So without further ado, let me just jump right into what I've prepared for you guys. So I just got this going today, and let's see. I want to make sure. See, can we still get, there we go. Now we got Craig too.
All right.
Okay. So for those of you who don't know who I am, obviously, as I mentioned, I'm the anti-financial advisor. I know many of you guys, we're connected on Facebook, LinkedIn, you kind of know me, but a little bit more about me. Live in Utah and been here. I'm here most of the time, although in the winter we do leave. We're actually looking to go to the Big Island, Hawaii this coming winter. We do have a blended family. So my wife and I just been married for 6 years. I brought 6 kids. She brought 2 for granddaddy, total of 8 kids that we now have. And so it's like a little mini village that we have in our house here. So we'd have a blended family of 8 kids, been financially independent twice. Why twice? Because I screwed up the first time. I actually got financially independent the first time when I was 28, almost 29. And then of course, when I got a little bit too big for my britches, and then the recession hit. And as Warren Buffett says, when the tide rolls out, you'll find out who's swimming naked. I was pretty dang naked. Don't try to put bad mental images in your head there. But things were pretty bad. But I was able to dig back out of that, didn't file for bankruptcy, but was able to dig out of that $1 million plus debt hole, and was financially independent the second time in 2016 when I was 39. So going on now, financially independent for the second time the last 6 years. Our focus in our company, we really we have 2 different arms. One is about this cash flow consulting, creating passive income. So we actually coach our clients one-on-one, as well as even in a group setting, how to get people out of the rat race. Legitimately passive income. Not like I said in my podcast that got released today, if you've listened to Money Ripples podcasts on YouTube or on iTunes, I talked about what is real passive income. We're not talking about passive income where you get another part-time or full-time business or job on the side, right? We literally mean money that works for you. So you have to work so hard for money, right? Your money's working for you. You're not the one babysitting it. But that being said, it does not mean you just turn a blind eye, as many people say, set it and forget it. We don't believe in that. We believe in stewardship. We believe in actually being responsible, because whatever you ignore will leave you. And that includes money, not to mention your spouse. So don't ignore them either, but don't ignore your money. But you can manage it, spend very little time on it while other people are making money for you. So that's a big part of our thing, is really helping people create that passive income and or freeing up cash flow to improve your cash flow situation. So you become work optional. You work because you want to, not because you have to. And our goal is always to do that within 5 to 10 years. And in fact, we want 1,000 of you, and I mean you, whoever you are, 1,000 of you financially independent by 2030. That's in just 8 years. So that's our big vision. And in truth, we really want it to be more than that. We're just trying to lay a basic groundwork of just at least 1,000 people financially independent where they are work optional. In addition to what we also do infinite banking as well. That's not the topic of today's conversation, but definitely that's something we teach on our podcast as well. We even have a whole playlist on YouTube about infinite banking and how you can get your money to pay you twice. All right. So some of you, if you're friends with me on Facebook or even on LinkedIn, you might see the occasional posts that we say where like, hey, this client, just like Craig said, got his client halfway to his $15,000 a month passive income goal, and he just started in the last month or so. That's awesome. That's not, results may vary. We'll just say that, right? But our average client has, up to this point, improved their cash flow by at least $34,000 in the first year alone, each year thereafter increasing. This particular client that we had, he actually was able to increase passive income by $19,000 by this year. This is a post I actually did in 2021. The funny thing is, one of my friends that commented on this is actually a multimillionaire in the real estate business, has a very active real estate business versus the passive. But after this, he started focusing more on the passive side, building up that portfolio for himself too, because he said, hey, show me how to do it, right? Which that's the thing, even if somebody's investing in real estate, it doesn't mean that they're necessarily passive, right? But here's my inspiration for today. Maybe your inspiration was a post. For us, my inspiration is really my dad. And this is a picture back when I was 16, just about to turn 17 years old. And, with my dad, it was interesting growing up because I wasn't trained how to really make money work for me. My dad taught me great values. So did my mom, great people. But when it came to money, it was very much a scarce conversation. Maybe like you growing up, it was very much like, hey, we can't afford this. What do you think? Money grows on trees? What do you think I am, made of money? Or even worse, my dad would even say about his job that he was getting burned out. He would say, Chris, I'm going to work until I'm dead. In fact, my job will probably literally kill me. And it was at that moment, especially as I grew up as a kid, I didn't want to live that life. I didn't want to have a life where I was working that job and doing the things he was telling me to do. He was telling me to get good grades, which I did. He told me to go to college, which I did. He told me to get that secure job, which I did not do. In fact, I ended up dropping out of college to become an entrepreneur because I didn't want to live his life of being trapped, being really stuck in that rat race. What's crazy is that first business I came across was actually almost 21 years ago, was becoming a financial advisor. I didn't know they'd take anybody with a heartbeat and could pass a test of 70%. That's all. That's only the barrier to entry. Oh, and just not have a criminal record. And you become a financial advisor. I know Craig can attest to that too. But really, for me, it was much bigger than that because I wanted to give my dad his life back. So he became kind of that initial inspiration. And if I can learn about money, even better. And who better to learn it from than the financial experts, which are financial advisors? Well, flash forward a few years later, my dad calls up and says, hey, why don't you come home for Christmas? I want to sit down. I want you to be my financial advisor. So I sat down with my dad, sat down at his kitchen table there. We're looking over the numbers and everything. And he said, all right, Chris, I'm 61 years old. What do you got for me? What else can I do? And I'm looking at his stuff, and he had done everything right that us as financial advisors were teaching, everything that your Dave Ramsey's of the world was teaching. In fact, he would have made Dave Ramsey blush because Dave Ramsey would have been so proud of him because he not only saved in his 401ks, he was cheap, just like, living on the rice and beans, although he'd live on, cigarettes and hamburgers sometimes, but not necessarily the healthiest guy, but he was cheap as can be. And he paid off his house early. He was debt-free. So debt-free, saving in his 401k, you'd think this guy was financially set. But as I looked at the numbers, I said, Dad, I'm going to be honest with you, but if you want to make this work, you have to make sure you die in 5 years. What? Yeah. You've got enough money to last you 5 years and then you're going to run out. If it weren't for Social Security, you would only have 5 years. Social Security will help you stretch it out a little bit longer. Okay. I want to last more than 5 years. What do? I don't know. I don't have any answer for you. You've done everything that I've been recommending clients do for the last several years. Okay, what do I do? I'm like, I don't know. I don't have an answer for you. As that moment, I realized there's a problem because for him, he had done everything right. He'd done everything I taught my clients. But then when I looked at my own clients' situation, none of them were truly financially free. And many of them were worried about running out of money as well. Then I looked at financial advisors. And in my office, there was over 100 financial advisors. And I could not pinpoint one of them that could retire off of their mutual funds, not just off of their business income streams that they're getting from people investing in those mutual funds. And they get paid commissions by keeping the money there. And so when I realized none of them were financially free, none of my clients were, I looked at my own life and said, I'm on the same path as my dad. I'm living cheap. I'm trying to pay off my debt. I'm trying to save in these mutual funds, hoping that it's going to work. But I'm not doing anything different than any of these people. So why would I do the same thing? That's the definition of insanity, doing the same thing over and over and expecting a different result. Why would I do that? So I had a choice. Either I keep down that path, I put on blinders and I stay a financial advisor and just keep living the dream and teaching the dream, or two, I stay in integrity and quit. I chose the latter. I quit. I said, I'm done. I'm not going to teach about money ever again. I will be a mortgage broker and I'll teach ballroom dancing on the side. So that's what I did. But it drove me nuts. I wanted to know the answer. I wanted to know how to become financially free. That's when I started to go on the journey. When the student's ready, the teacher appears. I started to find people that are doing real estate investing, people that are doing things differently. They're actually doing the whole rich dad, poor dad thing, but they were living it. And as I started to see that these people were some of them were in their 20s and 30s, financially independent, I said, well, if success leaves clues, these people left clues that I got to follow. And so I did. And later that year, I became financially free myself. And so that's the big point I want to drive home, is that what we're teaching here is, one, remember, financial advice is broken. It does not work. It's been proven not to work. And I can prove it over and over again. You can see it. The proof is in the pudding. Just so you know, the median 401k balance is only about $80,000. Guys, nobody can live on $80,000 for their life. Okay. And that's the average person. That's the person right in the middle. That's not going to work. It hasn't been working. Even if they're debt free, that's just not enough. And then you're begging that the government bails you out. What kind of freedom is that when you're relying on the government to help to carry you along? Just so you know, I'm just kind of ranting here a little bit. Everybody still with me here? Make sure you give a thumbs up or say, I'm still here. I hear you. I feel you, Chris. Just keep typing in here. But long story short, it doesn't work. But what we found has worked, not just for me in my own life, not just for Craig, but for many, many of our clients who become financially independent within 5 or 10 years of applying these things. Some people, even within the first year. Again, results may vary. Don't count on that. And here's really what it comes down to. Right now, markets are going down. And of course, they're driving interest rates up to the point that they want to create more unemployment. They want people to get laid off. You understand that the feds and the government are actually wanting people to get laid off to cool off inflation for you. That's bad for both fronts. If you're working a job, this is not a good thing. They're trying to drive the economy into the ground right now. And if you have money in stocks, that's horrible. And even worse, if your only stream of income is your job, for lack of a better word, you're screwed, right? And I love what Warren Buffett says. If you don't find a way to make money while you sleep, you will work until you die. This is why we need passive income, multiple streams. So let's talk about what those streams are. All right. I'm going to talk about several of them that our clients pick from, especially lately, but I'm going to pinpoint a few of these and highlight a few of these as well as some of our favorites. All right. So number one, turnkey rentals. Now, these are different than buying the rentals in your own backyard. Most people, when they say, oh, I've got a rental property, and Craig was just talking about with the client here, a lot of times people will manage their own properties to try to save a few bucks, but really you're dealing with all the tenants, the toilets, and the trash. You're the one that they have to reach out to. You're not truly passive. You really just created a part-time job for yourself. And if you love it, great, awesome. What we found though, is that you can actually get properties that you don't have to go hunting for. There's actually a buffet selection you can get through different turnkey investment companies where we find specific properties to say, I like that one, where you actually know the cash flow before you get into it, before you buy it, you know how much money you're going to make off of it. Secondly, they help you get the financing for it if it needs a mortgage. Thirdly, they'll actually property manage it for you or help you find a property manager where you don't deal with the tenants, the toilets, and the trash. You are hands off, be able to invest that money or let it work for you. You just collect the rent checks. Now, does that mean it's foolproof? No. Can renters skip out, or could they end up moving and you have to find new renters? Could there be maintenance issues? Yep. But guess what? You don't deal with that. The property manager does. They deal with that kind of headache. You just say, hey, great, get somebody new in so we can start getting paid again. Thanks. And you move on. That's kind of the nice thing with turnkey rentals. What we found is in many cases, we've had turnkey rentals paying sometimes double-digit returns just on the cash flow, not including any appreciation at all. I've had turnkey rentals that have grown in the last 3-4+ years of like 200, 300% total returns that I've had. While, really the last 3 or 4 years, people have, had money in the stock market, and they might have a little bit of money they've made in the last 3 or 4 years. We've actually come out looking like kings. So that's turnkey rentals for you. We just had one yesterday. We actually had we have monthly calls with our members, with our VIP members, and had on one of these turnkey companies where you don't even have to get a mortgage. You're not worrying about interest rates. It was a $110,000 property you can buy in cash, but the monthly cash flow after you pay them their property management fees, $930 a month. That's about 11 grand a year, guys. Awesome. And again, that's tax advantage too, because you're able to write it off with depreciation and all that kind of fun stuff. So turnkey rentals actually is still one of my favorite go-to investments, especially going forward in 2022 and into 2023. Lending and notes. You can actually become the bank. Now, many people know that when you borrow money from the bank, they're lending you money. You have to pay money to the bank. You pay interest to the bank. Do you realize that you can actually become the bank? You can have interest being paid to you for lending your money to other investors. So when I talk about lending, specifically, you could be lending money for a property where you're the one on the title of the property, just like the bank is on yours. You know how you hear people always say, well, I don't own my property. The bank does because I owe them mortgage payment. Guess what? Now it's reversed. Now you get to be on title. Yes, somebody else is on title with you, but if they stop paying you money, you foreclose, keep the property, sell it to somebody else, or put it on terms. So you can actually get paid every single month on that, whether it's from an investor or even from somebody who's buying a property. So there's ways to actually do that. And there's even short-term lending where sometimes investors just want your money for a few months, enough to renovate a property and then sell it. We have one investor in our group. We have about 22 different vetted professionals in our group, operators and people like that we put our money with. We don't invest the money ourselves in the sense that we don't raise capital and invest your money for you, but we have other people we can connect you to. One of these people, he has a 4-month short-term loan that he'll pay 5% every 4 months. If you do the math, that's 15% a year on that money. And had a great track record. He's been doing it for 30+ years, since I think the 90s, to be exact. I can't remember if it's the late or the early 90s, but he's been doing it since the 90s. Long story short, he's been doing it a long time and has a great track record, and people love it. And a lot of times they'll keep reinvesting their money. That kind of leads us to funds. There's also people that might have a fund where they might buy multiple assets in there. Maybe they'll actually buy multiple properties. We have one guy that has literally over 2,000 properties in a fund that you can just get the profits off of. So now you don't deal with one house. Doesn't matter if a tenant doesn't pay. Guess what? You have this really like a mutual fund in a sense. It's not a REIT, but it's an actual fund that you're getting paid real profits off of that. Some funds even give you a certain set amount. We have one guy that will pay 10% if you only keep your money with him for a year, or he'll pay you 11% per year if you keep it longer. And he just pays you consistently 11%, paid out quarterly, broken up in those payments. So there's a lot of different types of funds. We have another fund where it's like short-term lending, but to many different investors. So you get the advantage of that diversification, so to speak. There's also apartment buildings. You can invest in apartments. Often you go into what's called a syndication, where you pool money together with other people and you become a partner in it. But it's a limited partner. So if somebody sues, you don't get sued. But you get the profits on the building. Sometimes they'll pay you what's called a preferred return. Preferred return usually just means what's the minimum return they got to pay you, almost like their debt payment to you. And then they might even pay you profits on top of it. We just had one recently where it was actually, you can call it like a fund, but really it was a syndication for apartments. It was 2 different apartment complexes in Michigan. And get this, needless to say, this went fast. This is why we never put the best deals on our podcast. It was a 16% preferred return. That didn't include the growth that you could be earning on top of it too. 16%. He called it the Michigan 2 investment. And that thing filled up so fast, they actually end up overselling it in case some people back out. They had some people waiting in the wings, hoping some investor will say, I'm not going to send you the money. So then they can put their money in and get paid 16% broken up quarterly. That's 4% a quarter, right? Huge returns. Imagine that. I mean, if you have $100,000 making you 16,000 a year passively, and then you still get your $100,000 back later. That's the kind of investments we do. Self-storage. This one's not my favorite right now, but it's still a really good one, especially if you're worried about the recession. They are very recession resistant. I would actually say that maybe into 2023, we probably would see more better self-storage opportunities, because what happens when inflation goes up and or people do start getting laid off, or they have to downsize or go into smaller properties, guess what? They end up renting their storage units to keep their junk in. And that's where you can make money. You can actually make money, especially during recessions. Many people will go to self-storage units even more so during that time, making you more profits. It's not hurting people in that sense, right? Because people need that option. But if there's going to anything bad happen, it's nice you know you can profit off of that. Just so you know, 2 of my 3 favorite things right here, right now, and I might even throw in a 4th bonus here. Turnkey rentals, lending, and notes are my favorites, even though I've invested in just about all of these here myself. But self-storage is definitely one I think that maybe in 2023 we'll hear more about. The next one, oil or mineral rights. You can actually invest in oil. If you're going to be paying more at the gas pump, shouldn't you be making more money off of it anyways? So there's actually ways to do that. We'll actually show some case studies of people where they've done that and made some great money off of it. Partnerships. Partnerships are a great one as well. I'm in one right now where we're actually transacting, buying and selling land. That partnership right now is making me about a 50% rate of return. Again, results may vary based on the partnerships, but it's been pretty consistent even with some other people of our clients have invested, making about a 50% return on my money. So I have about $125,000 right now, paying about $5,100 a month. So, I mean, do the math. It's $61,000 a year from about $125,000. So almost 50%. Regardless, doing great things. Some people will do partnerships, so they might go into an investment deal together, right? Again, it's not really an investment in that sense, but you're more going in as partners. You're financing it, maybe even with them at the same time. But if there's any profits, you get paid your percentage, right? So there's lots of opportunities there. All right, so how are our clients doing it? This particular person, R&D, this is a couple. We call it R&D. It's not because they're research and development. That's just their initials. This is what's cool. Craig actually worked with these guys. They were first, before they did any investing, they're able to free up about $3,800 per month in loan payments. When we started to look at their situation and said, wait a minute, before we were about investing, and they had a lot of money in stocks and mutual funds and whatnot. It's like, if you just use some of your money to pay off some of these loans or even refinance, free up $3,800 a month. That right there is, that's about over 45 grand a year right away. They also, I know on the tax saving side, I know Craig probably knows a more updated number. I put on the low end. I would guess they're probably closer to at least 10, 20,000 a year they're saving. Craig, would you agree with that?
More than that for sure. I mean, they're small business owners. So if you're listening to this and you have your own business, that's one of the key drivers is to make sure you're optimized from a tax perspective. So the 3 of us got on the call with a couple different CPAs that we recommended, and their tax savings just from making sure they utilize the right investment strategies, as well as some other strategies their current CPA wasn't using, saved a lot of money. Definitely well over 10,000.
Okay. So it might be more than that 575,000 total. That's why I put the plus next to it.
Yeah.
Yeah. We even had them selling rentals, improve their cash flow by 2,000 a month there. If they move all their money out of stocks into alternatives, they might keep some money. They're still in the process of doing this. They're still, in the middle of all this. They had $5 million in the stock market that could create, even at just 10%. And as we mentioned, there's a lot of investments that pay more. That would be 500,000 a year right there. Huge. Another one we're working with had about 650,000. She did some oil investments like we talked about there, getting paid about 32,500 a year. She put some money with some debt funds, making money there, as well as a real estate fund. In total, about 76,000 a year from her 650,000. Notice that's even more than 10%. Again, results may vary. KW, just had some money in savings, obviously put that to use, 27,000 a year, doing a home refinance of their home, could actually, on top of their mortgage payment, make them an additional 17,000 a year. And one of the first things that they were recommended to do is pay off their lease, which would free up another 4,000 a year, put them at about 48,000 a year. This is another client of mine. This is probably one of the oldest clients I've had because he was with me through 2 different companies I worked with. This guy, actually, we got him to refinance a property, was able to free up 1.4 million that he was able to go and invest. And so this money we're talking about is actually net returns. This is not the gross return. This is net after making his mortgage payment. He got money into oil investments, making 100,000 a year. He had short-term real estate investor that he was doing some stuff on. Even got a development partner on. That was not one of our deals. He found something outside of our network. Did some turnkeys. We recommended he like really look at diversifying his portfolio, doing that. Also some other outside investment he was doing. In total, about 232,000 a year after, that's net after the property refinance and everything. By the way, his goal was only about 10,000 a month. So we got him there. This guy we actually had on a podcast for the second time. I know Craig also works with him, with Dan. He was one of the 4th ranking guys in the California National Guard, colonel. And he was one of those guys that said, I've got $1 million. If I do the traditional retirement plan, my financial advisor says I can pull out 3% a year, because that's all you can really pull out of a retirement plan if you want to keep your money lasting for life. Hopefully, as long as the market doesn't kill you. So he was told 3% a year. Well, do the math. You have $1 million. You're a millionaire, yet that only gives you 30,000 a year. You're a broke millionaire. You're living below a poverty line as a millionaire. This is what's happening to people even when in retirement. And he's way beyond the average person that has money saved up in these plans. Again, he did everything he could. He even bailed out of the market in Y2K and in the Great Recession. He actually got out of the market at the right times just to preserve his money in those plans. So he actually, if he were still in the market today, he probably would have already gotten out in 2022, earlier in the year, just because he's that kind of guy to time it right. But despite all of that, he had to go and invest it. Well, he came to us. He said, guys, I got to figure out what to do with this money. I got to make more than 30,000 a year. Well, on our last episode we just aired with him, it was just in the last few weeks, he just announced as an update, he's at a net $11,000 a month from that million that he had invested. So huge.
And growing.
Yeah. He's not stopping. He's like, you know what? He's already retired from the military, but now he's doing little private jobs. He's like, I'm just working because I want to. And hey, I can just invest more now. Right.
Yeah. Real quickly, Chris, too. You bring up a good point when you say, how well he's doing specifically. So you can kind of think of cash flow accumulation the same way as a traditional financial advisor will talk about compound interest. So with Dan, who we were just talking about, who hit 11K a month, he is still working. So he doesn't even need to draw on that money yet. I mean, he could take a break and travel the world if he wanted to, but just from reinvesting that current cash flow, he can, create another 1 to 2K a month just from the current cash flow that he's building. And think about how that every year, right? Think about how that snowball continues to grow. Eventually, within the next couple of years, he'll be at, 15, 20K a month. And I mean, the snowball grows quickly. And that's what a lot of the coaching we do is really kind of looking at your current scenario, mapping out where you want to go, and then really kind of focusing on, how to grow that cash flow snowball.
Absolutely, man. And that's what really comes down to, guys. Like the difference of what we teach here to you right now versus the rest of the world trying to teach you about money and finances is that they're teaching you how to accumulate money. We're teaching you how to accelerate it, to create cash flow or passive income. Because the truth is, it's not about how much you've saved up. It's not about how big your little nest egg is. What it really comes down to is what's the actual income you're receiving where you are, like Dan and what Craig had just described there, where you're work optional. You work because you want to, not because you have to. Where you could just call it quits and say you're done, right? I was just telling my wife today, she's like, Chris, I can't believe you're doing, for me, it's 4 o'clock, almost 5 o'clock, 4:30 right now. And she's like, I can't believe you're working so late. I'm like, you're right. Like I don't even have to do this business at all. Like I make between 30 and 40,000 a month passively. And even if I shut down this business today, but the thing is, there's so many of you that need this something different. You need a different way out, because the worn out path that everybody's taken, that road very traveled, has been stacking your money away in your 401ks and IRAs, thinking that that match will actually do something. But in truth, at the end of the day, it doesn't amount to, as a, Matt Foley, motivational speaker from Saturday Night Live, would say, it doesn't amount to jack squat, right? It's just useless. Okay. It doesn't work. And that's what we're here to teach you. So here's 3 things I would give you action to do with this. One is get lean. Start tracking your money. Really understand what you're doing, how much your expenses are, how much income's coming in, how much could you be adding to this? Just like, when Craig was mentioning about Dan taking that $11,000 a month and using that to reinvest, same thing for you. How much extra do you have per month that you can take to then reinvest? I don't care if it's $5 a month. Find out, do it and get lean. Find ways to free up some cash. By the way, we have a great ebook on our website, moneyripples.com, called Beyond Rice and Beans. If you're saying I am paycheck to paycheck, read that book. It's only a half-hour read because I put page breaks and pictures in it. It's a very short read, but there's some good actionable stuff to help you find and free up cash. So get lean and find out how much you have. Just today, I talked to somebody. They are able to save. They're just a young couple in their mid-20s, saving $7,000 a month. And I was like, holy cow, guys, this is incredible. This will change your life. And they have a goal of $15,000 a month. I said, if you keep this up, you might be early 30s, maybe sooner, that you guys can be financially free. Get liquid. Get liquid means don't get your money all tied up and trapped in places, especially with places like people put their money in 401ks. 401ks don't really give you money back because you can't get to it again without having to borrow your own money. But they require you, we put it in, they want you to keep it there, right? They don't want you to get it out. You put money to pay off your house early. It's stuck there. You can't get it out. The last recession, I would have been in a much healthier position had I not tried to aggressively pay down my house. Because I tried to pay down my house, all that equity eventually disappeared because I didn't have the ability to get that money out, especially when I needed it. Banks never want to give you money when you need it. So we ended up having to get rid of the house. And by the time we finally sold it, there was no equity left in it. We were actually upside down in our own home after having $150,000 of equity. Don't get all your money tied up in illiquid assets like real estate properties and 401ks and IRAs, things like that. Get it liquid, get it available in savings. And that's what I mean by get out. Sometimes it might mean that this might be the perfect time to get your money away from those places. Maybe now's the time to get your money away from the stock market. Even if you keep it in your 401ks or IRAs, maybe you just move it to a place where it's not gambling in the markets anymore. Maybe it's just going to a money market account there. Whatever it is, move your money, get it to a place where it's ready to be deployed. And that's when you'll start to have the ability to create passive income today, not hopefully, if you're lucky, by your 60s, 70s, or 80s, right? Give you an idea, if you did a mutual fund, just so you know, the average mutual fund at best, right? Even the S&P 500, the last 30 years, only averaged about 7.75% in 30 years. That's the average actual return of the S&P 500. And just so you know, 90% of mutual funds don't even earn that high of a return over time. And even then, when you start factoring out, fees that come out, because yes, you do pay fees, especially if you have a 401k, they have higher fees than even normal type of funds. You're lucky to make 7%. Well, if you had 100,000 a year cash flow goal that you want to retire in 10 years by 2032, the year 2032, you want to have 100,000 a year coming in passively and live on that 3%. In a mutual fund, you got to save, look at this, $19,400 a month. Guys, you got to be saving just under 240 grand a year to live on 100,000 a year in 10 years. Does that sound like it sounds awesome? Nope. Okay, now if you do like what we're talking about, even if you only earn just 10%, which is kind of like our baseline return, you got to save just under $5,000 a month. Now, granted, that's still a good chunk of change, but that's a heck of a lot more doable than $19,000 a month. If you even earn just 2% more, which a lot of our investments will make at least 10 to 15% average, some of them will even double every 5 to 6 years, depending on the type of investment you do. Well, at even just 12%, that's $37.20 a month you got to save. And this is starting from scratch. If you already have money saved, you already have an advantage over this where you can speed up that time frame to less than 10 years, guys. That's how much different that is. This is also why people can't do it in mutual funds. The people are not able to save this much. I had a client who actually did reach out, says, Chris, I got $3 million in mutual funds. I'm 52 years old. I went to my financial advisor. I told him I want $500,000 a year of passive income coming from my investments. He said, well, keep saving. If you keep putting away $300,000 a year like you've been saving, then by the time you're 65, you might have enough to pull out $500,000 a year. I told him, I said, listen, you got $3 million a year. Even if you made 10%, that's $300,000 a year. We already got you almost all the way there day one. You know, if you keep reinvesting that, if you keep investing like you've been, you'll hit $500,000 a year in no time. So that's the big difference, guys. So I'm open this for questions, but I want to just leave with one, just one thought here. Okay. Is that what needs to change is that you have to, start, change how you save or invest your money. You got to do it differently. You got to change your mindset around money where it's about passive income and acceleration, not accumulation. You're not a squirrel, right? You're definitely not a squirrel saving this up. You got to be the road runner. You got to be the one that's really taking that and running with it and be willing to do what's right for you and your family. At the end of the day, that's what this is about. This is not just about you. This is about what kind of legacy. What are you teaching your children? Just like I was taught how to do wrong, how to basically save and pay off my debt to not become financially free. That's what I was taught. What if you changed your future? What if you change your family's legacy and destiny? Because you're the catalyst. You are the key figure that does that. You're the one that your kids say, man, like I am so grateful my parents did it differently. They're not like all my other friends' parents who are now broke, living paycheck to paycheck, begging that the government will pay them more Social Security and they'll get that cost of living increase next year because of inflation, right? You're not that person. You're the person that they actually say, you're amazing. You're the person that people say, how did you do it? Just like people kept asking me when I did it, how did you do it? You're like, I just did the opposite. I didn't do the same thing. Much different life, much different way of doing it. So here's the last thought I'll leave you with. Like I mentioned, I was a ballroom dancer. I actually became one of the nation's top amateur ballroom dancers. But before I did, though, I remember I went from Idaho. I transferred to a school in Utah. That's how I ended up here in Utah in 1999. And I remember when I was there, I thought it was pretty dang good, right? I was doing all right. But I remember there was a teacher that saw me. She saw me dancing. She said, Chris, you're good, but you're not great. She's like, really, Chris, if you just change one thing with your dancing, just one thing, it'll not just get you to the point where maybe you might make the semifinals or the finals, but you could actually win first place in the finals. She's like, but you just got to change this one little thing. And she's like, and I know you can't see it because even though you're staring at yourself in mirrors, because all of us ballroom dancers would stare at ourselves in the mirrors, right? She's like, it's so subtle, you won't see it. What she started to do, she started focusing on my center, my core, my center of gravity. She's like, if you get this under control, the way you move, things will become more effortless. They'll become easier. She's like, you'll actually spin faster and sharper. You'll look better. The judges will pick up on that and start giving you higher marks. So I did. And it felt weird at first. It felt unnatural. But as time went on, guess what? I did it. And as it got more natural to do the unnatural, to do something that was new, that felt uncomfortable at first, but then became better, then I was able to actually win competitions. And I did amazing. I actually remember one of my competitions won 4th in nationals, dang, I won that 3rd place, but didn't quite get it. I blame my roommate who beat me at 3rd place. I think it was my partner. That was what it was, right? But regardless, the thing is, it took a coach, it took somebody from the outside looking at me saying, listen, you're close. It's subtle, but you change this one thing and it's going to be uncomfortable. It'll be better. This is true for you and your finances. You might feel like some of these things would be uncomfortable. The truth is people will say, well, Chris, I'm a conservative saver. No, you're not. You're a comfortable saver. You're not a conservative investor. People would say conservative investor really just means I'm just doing what everybody else has done. I'm doing that worn out path that has been proven not to work. But doesn't mean that you're actually a conservative person. In fact, when Craig and I look at what we do, we look at ourselves being very much lower risk conservative than people gambling their money in the stock markets. And hey, my personal belief is I don't believe in gambling. I don't go to Vegas to gamble. I don't believe in that kind of crap, right? Maybe you do, and that's fine. But I don't want to gamble my future, my family's livelihood away, our destiny, our legacy. We don't want to gamble that. That's why it's great to have someone to be able to see from the outside, say, look, have you considered this? Maybe you don't even see it in your own situation. As brilliant as you are, did you see this? And man, I'll tell you, that's when you start to see things work. And it'll be uncomfortable, but eventually you'll get to the point where you say, why didn't I do this before? Right? So anyways, I've been going on and on about this. Let's just open this up to questions at this point. So let's hear it. Let's start looking at some of the questions. I know they've been coming in. Craig, I know I've been babbling on too. Any final points for you as well?
Yeah, I mean, you made a lot of good points throughout the presentation. I'm sure the audience got a lot of good info. I would say a couple things to touch on. Number one is whenever you work with us, we do a really big deep dive into your personal financial statements. That's kind of like the foundation of your financial house. So, oftentimes when you're, hearing about corporations, they talk about their financial health, their balance sheet, their income statement, their statement of cash flows. You, as a personal investor, have those same three financial statements. And before we can really talk about investing, and growing your passive income, we have to make sure your financial house is in order. So that's a really big part, especially the first kind of like the first couple of meetings when we do a coaching relationship, is really making sure that foundation is very solid. And then when we do talk about investing, we do a great job of educating our clients. So our goal is to really teach you how to fish, right? So while we don't give, quote unquote investment advice, we're not going to say, put your money here, put your money there. We give you options, right? And our options all come from very well vetted sources. So whenever we talk to people about these are your first three options we're gonna give you, set up those calls, educate you on how those investments work. Those are people that are in our network that are very, very well vetted. We have a lot of people who want to join our network that we don't accept for a variety of reasons. So, I was talking to a client today, the one that Chris, you alluded to earlier, who's about 50% of a way to his goal of 15K a month. And he told me, he said, even though, Craig, you talked to me about the risks, about the returns, I felt very comfortable because these people are already pre-vetted in your network, right?
Right.
You and I oftentimes have money with a lot of the people we introduce our clients to. So I think that gives a lot of people peace of mind, just to know that, yes, there is risk with every investment, but because these are, very well pre-vetted sources who have been in the industry for decades, it gives you a lot of confidence, that your money is in good hands, right? It's not like, just people from the internet, who've, were born in, 1995, running their first hedge fund, who have never seen any volatile markets before. So I think that's really important to point out that, across all the different asset classes that you covered, turnkeys, notes, partnerships, oil and gas, syndications, funds, all of those people in those networks, are part of our trusted advisor crew, who we have worked with for many years, who, you and I personally invest with as well.
Yeah. Good point. I know Danielle's probably laughing right now when you said born in 1995, because that's when Danielle was born. So she's like, wait a minute, you can invest with my fund. No, she doesn't have a fund, guys. Sorry. But yeah, great point. Yeah. The vetted, I mean, that's the one thing that it's not just what you invest in when it comes to passive income, which investments, most importantly, is who you're investing with. I know there was a question actually from Jesse. How many turnkey rental companies do you refer to? Jesse, right now, about 2. But in our network, we have about 6. Right. So depending on times and conditions, especially with the rising interest rates, some of these turnkey companies, which were profitable before, now these rising interest rates, their model is not very profitable. So when we help direct our clients, we never give investment advice, but we do say, hey, based on your situation, here's a few companies you might want to talk to. And hey, if you're looking at these deals, you're not sure what to do, come back to Craig, come back to us, ask us these questions, and see, bounce the ideas to make sure this is the right fit for you, the right kind of deal. The nice thing is we're not on the payroll of any of these people we vetted. So it's not like we're saying like, hey, we're getting our bonus check this year. We're basically just trying to help match you up with the right deal. And to kind of address Nathan, when he's saying like, so what you're saying is I just can't save my way to prosperity. That's exactly what we're saying, Nathan, is that you can try to save, but you never hear about people saving their way to wealth. Saving is good, but it's not everything. You've got to do more than just that. All right, let's go to some of the other questions here. Let's see. Man, there are a lot of comments over here. Let's see. Okay, so we got. Before I forget, because I know Marcella brought this up. She was going over the website. Check it out. On our website, moneyripples.com. Here's one thing I'll ask you guys to do. Go to our passive income calculator, fill it out. There's about 10 questions to fill out there, and see what number you get. The passive income calculator, it's pretty complex in the formulas and such. So it's possible you might have a negative number pop up. That could be an error. It could be also, maybe you misunderstood the question, you put in the wrong numbers, but if you put in all your numbers, it should spit out almost exactly what we would be able to help you create in passive income in the next 12 months. So we got some people that will have like hardly anything, maybe like a few hundred or a few $1,000 a year, which is still great. And then we get some people that have a few 100,000. I think the biggest number I saw was like around 600,000. Needless to say, we wanted to talk to them very badly because we want to make sure we take advantage of that. And that's even above and beyond. Some of these people are even investors, and this is above and beyond what they're already making. So yeah, right there in the notes, you can see the link. You can also see on the screen here, however we make it pop up on the bottom of the screen, but it's moneyripples.com/cashflow-calculator. So Danielle's like, whoops, not the optimizer, the other one, right? So if you go to the main page, look up Cashflow Calculator. It's really awesome. There it is right there. Really cool to try out. Now, here's what I would say. If the number's about 15,000 or more, you should definitely reach out to us and say, hey, can we have somebody verify these numbers and contact us about this? Because you might be the person that we would want to work with one-on-one to help you get those results and even increase that cash flow year after year, that passive income. If it's less than 15,000, that's fine too. We also have what's called the Wealth Accelerator Academy, which helps kind of give you the ability to boost those numbers up more. It gives you a lot of the same education our clients get, but it preps you more to be able to have enough cash to start investing so that you can do that. Okay, yeah, Charlotte, yeah, definitely. Yeah, take that calculator. It's awesome. Cynthia asked, she's like, how do you know when you're ready to start investing? Never done much before. Well, definitely that calculator will help. Here's the thing is that for the most part, if we just to say in general, our clients usually have at least $200,000 to invest if they work with us one-on-one. For the Wealth Accelerator Academy, we have people with virtually nothing to invest. That might be the best place to start. But for one-on-one, usually you need at least 200,000. Not because you need that much to make money, to make passive income, because we have passive investments, even ones we talk about in the Wealth Accelerator Academy, some that have a minimum investment of $100. Mm-hmm. Some of them are like $1,000 minimum. So you can start creating passive income right away. You know, I know with my wife, I know Cynthia, you know my wife because you guys are friends. You've been friends for years. I know with her, she even said, hey, I'm going to take some of this money that I've set aside for the kids and use that, put that in here. So it's generating passive income, building up their accounts that if they decide to go to college, great. They got some college fund money. If they don't go to college, maybe they become an entrepreneur like she is and like I am, great. Then that money can maybe help be seed money to help them start a business, right? There's so many different things you can do. So, so what do you need to know, or how do you know when you're ready to start investing? I would say this is that when you're informed, when you have the education, then you know. And so if you're not certain where that is, I definitely recommend at least starting with like the academy, start there, get that real basic information, really. And when I say basic, I say basic, but in truth, compared to anything else taught out there, it probably feels like not like finance 101. It's probably like finance 202 or 303. Yeah, we do go to a lot of concepts there that really help you increase your cash flow, even free up money in taxes, as well as increase your passive income too. Great questions. Other question I might have missed. I know there was a lot in here. Oh, I missed the one question from Charlotte here. What can an amount like 20,000 do? You need to save more like 6 figures to really start investing. So again, great question. That kind of goes along with this. I'll piggyback on that. So $20,000, right? Now, if that's the only 20,000 you have, including your emergency fund, that might just be your emergency fund. And if that's the case, what I would recommend is look into another concept that we talk about, not on this call here, but look at the concept that we teach called infinite banking. That's another way you can start saving and building up this cash, but get a little extra leverage on it too. It's not necessarily a passive income type of thing. The cool thing is the way you use that strategy, it's a way to build up a savings in a tax-free environment. And then you can use that money to go and invest while still earning money at the same time. So you actually make money inside the life insurance policy, while at the same time also making money in those little investments you might do, even if it's a minimum of 100 or $1,000. So there's a lot of cool things you can still do that way. And again, we teach that in the Wealth Accelerator Academy, and we teach that to all of our one-on-one clients as well. But if you're starting with 20,000, yeah, that's most likely it might be your emergency fund that we want to maybe diversify and get making more than 0.nothing%. Oh, and by the way, there are some savings accounts, online accounts we talk about making 2 to 3% right now. That's still liquid to use. Great. Other questions? I'd love to hear more from you guys. I know there's several of you guys watching this. What's burning? What do you feel like I've missed? Right? What do you feel like you needed to use to bridge that gap? Yeah, Danielle, thank you for putting in the comment there about the infinite banking. So there's a YouTube playlist just on that topic. If you want to go down that rabbit hole, go to the Money Ripples channel, look up infinite banking playlist, and plenty of stuff there. David asks, do you like carbon capture technology equipment investing? Hey, I actually have a friend that does that. So here's the thing. It can be good, right? It comes back to the question of who, not always just what. But if we talk about just the what, not the who, because if it's one of our mutual friends, he's awesome, right? But the thing with any kind of technology, understand that there are some challenges that come with it when you try to invest in technology. One, there's obsolescence, right? Technological obsolescence that happens where that technology, if it all of a sudden starts to change, then that technology you have is obsolete, and therefore it's goose egg, right? You might lose everything. The other thing is technology typically gets cheaper over time, right? I know that many people, it's almost like you ever had a solar energy company come to your house and they'll say, it's just getting more expensive. And granted, maybe the panels get more expensive, but they're almost like timeshare companies. Like, it gets more expensive, Like, well, if I look at the history right now, and we just got solar, that's why I'm thinking about it. That technology got better over the years and didn't really go up that much in price either. It actually was, it went up a little bit, but compared to the technology and the production of it, not that great. So when it comes to technology, it's a little bit tricky. People ask about ATM funds. Although we don't have that in our network, I do know people that have access to investing in ATM machines, the things that pops money out, that kind of thing. There's some ATM funds that have made 20, 25+%. And they even get tax benefits. The problem is, of course, what if we go digital, right? Which I know that our country will eventually go digital. What will that do, especially if cash becomes useless? We always saw 2020 where they're saying, don't accept cash, those kind of things. It just adds an element of risk. So it doesn't mean that's a bad investment. Same thing with carbon capture technology. It doesn't mean it's a bad investment. It just means that you have to go in with eyes wide open, just like when you date your partner, right? You want to go in with eyes wide open, and then when you get married, eyes half shut. But eyes wide open before you get in the deal, because you want to make sure that you really look at those risks, and are you willing to accept those risks or not? For us, in our network of people, we really like to go very low risk with high returns. So that's why we typically look at double-digit returns for our money, but we're not looking to do anything that would make you have a hard time sleeping at night. We really don't want you to do high-risk stuff.
I'd also piggyback on top of that, Chris, and say, Dave, when you're thinking about new investments to do, you always want to look at your balance sheet. So those are the assets that you own, so cash, investments, and you want to make sure that they align with what your goals are, right? So we do a lot of work with that when we work with clients. Is you've got a 401k, you have a rental property. What is your actual goal? Are you trying to grow your money more aggressively? Are you trying to get cash flow? And each one of those. Each one of those.
Appreciate that. You're welcome there, David.
Yeah,
we always try to over-deliver with advice here.
Each one of those assets should be aligned to what your goals are, right? Because I've worked with people who want cash flow, but they're all growth investments, right? So then we need to make some tweaks. So I know a lot of technology investments can have some really good upside when it comes to growth. Oftentimes there's not a cash flow component there. So I'd really kind of focus on, where are you now? Where are you trying to go? And then make sure the investments that you're doing align with kind of what that end goal is.
Yeah. And actually, Craig gave away one of our secrets. When people say, well, how do you pick which investment you invest in? That's a big part. When we ask you, are you trying to grow your money? You're looking to put this away and let it grow on its own, or do you want cash flow coming from it in the near future? Well, that will eliminate a bunch of options if you say, I want cash flow now. In fact, I just had a client I was speaking with before we did this, and that was her thing. She's saying, hey, listen, I'm trying to get my business to take off, but I need more cash flow coming in now. So when we started strategizing, in fact, the cool thing is we're probably going to help her save a lot more money in taxes. But on top of that, we're actually helping her sell a property and then taking the equity out and investing it. So she saves on the payment of the property because it wasn't paying her any money. It was really a liability, an expense, and turning it into now passive income about $20,000 a year. It'll actually in total price save her and make her $30,000, $35,000 a year. And that's the thing. It's like we want to make sure she's going into cash flow. Yeah, David's like cash flow. Yeah, I agree. I'm a huge fan of cash flow. And now if somebody has IRA money, maybe you have an old IRA or Roth IRAs, something like that in your situation, saying, what do I do with this thing? You can actually use that to invest. You could try to create cash flow from it. Although if you're not 59 and a half, you have extra taxes and penalties. Or you can self-direct it, invest it in these same places that we're talking about here, and let that money grow tax deferred, and then pull it out later. So there's a lot of options there. I'm surprised nobody's asked us about Bitcoin yet, but Bitcoin, same kind of thing, right? Yeah, kind of like what Craig said on your balance sheet. Make sure it's a tiny piece of your balance sheet if you're going to gamble and stuff like that. But just so you know, now is probably not the time to buy Bitcoin. All right. Any other questions? I know we're coming up on the top of the hour here. Any last questions here? All right. So here's what I'm going to finish with you guys. Like I said, this is really all about, how do you create passive income now? 2022, I think there's great opportunities. We mentioned like those turnkey rentals are great. There's a lot of things with funding and lending money, especially as interest rates are going up. You kind of can negotiate a little higher rates of return, 10+% return, lending your money. And of course, some of my other favorites are like partnerships, even oil and gas, mineral rights, things like that can actually make big money right now based on what's going on. So, but again, it always comes back to you, what's best for you, not just what I like or what Craig likes, but what you like, and creating that life of freedom that you want. So again, go to that passive income calculator on moneyripples.com. Try it out. It's free. Don't worry. It doesn't bite you. But it's really cool. It's we put a lot of work into that to really take my brain of how I calculate a person's situation to see how much passive income we can help you create in the next 12 months. If it's 15,000 or above, definitely reach out to us. If it's less, let's have you go to the Wealth Accelerator Academy and help build that up so that number can get higher. Guys, appreciate you joining us. Have a great day, and we'll talk to you later.